Have you heard of the Big Short investor, Michael Burry? Well, he's ringing the alarm bells yet again. In a recent tweet, Burry warned that the U.S. economy is headed for an inflationary recession in 2023, and retail investors buying meme stocks and cryptocurrencies are set to take a big hit. This video will dive deep into Burry's wake-up call and discuss what it could mean for investors. Make sure to hit that subscribe button and don't forget to click the bell icon so you can keep up with our latest content. Let's get started. In a series of posts on his private Twitter account, Burry expressed his worry that the stock market is inflated to levels not seen since the dot-com bubble of 2000. He warned investors against putting too much faith in the current market and urged them to be vigilant if they choose to invest. He also noted that under the current conditions, it's extremely difficult to find values in this market, and that investors should be wary of companies whose share prices have been driven up by an influx of money from retail traders. Burry's warning comes on the heels of a massive surge in stock prices, spurred by record-breaking stimulus spending and optimism about the vaccine rollout. The S&P 500 has gained over 50% since March 2020, hitting all-time highs in recent weeks. While Burry's cautionary remarks shouldn't be taken lightly, some analysts remain bullish about the market outlook for 2023, citing strong economic growth and continued fiscal stimulus measures from the government as positive signs for the economy. Investors should consider Burry's comments, but they should also carefully evaluate the market conditions and make decisions about where to invest. Past predictions from Burry are renowned. In 2005, Burry began looking closely at the subprime market. His investigation into mortgage lending practices in 2003 and 2004 enabled him to make a reliable prediction that the real estate bubble would burst by 2007. He became confident that subprime mortgages, especially those with teaser rates, and the bonds based on these mortgages would start to decrease in value after the original rates were replaced by much higher ones, often within 2 years. Michael Burry paid for credit default swaps, and some of his investors were concerned about the accuracy of his predictions. Fortunately, he was right, earning himself $100 million and a return of over $700 million for his remaining investors. Michael's Scion Capital recorded an impressive 489.34% profit after fees and expenses from its launch in November 2000 to June 2008, compared to the S&P 500's mere 3%. According to his website, Burry shut down all his credit default swap investments in 2008 before the federal bailouts. This also meant closing his company, so he focused on personal investments. In an op-ed for the New York Times in 2010, Burry suggested that anyone who monitored the financial markets from 2003 through 2005 could have detected the increasing danger in the subprime industry. He held federal regulators responsible for not listening to warnings from people outside their inner circle. Burry restarted his hedge fund in 2013, going by the name Scion Asset Management. He registered as an exempt reporting advisor with the state of California and received approval from the SEC. His major investments include water, gold, and farmland. Burry has noted that plentiful, fresh drinking water should not be taken lightly, as it is subject to political and legal issues. In February 2019, the SEC required Scion Asset Management to file a 13F with over $100 million in holdings. This filing revealed Burry's portfolio of large-cap stocks and assets worth $103,528,000. In August 2019, Bloomberg News quoted an email from Burry in which he suggested that passive investing had created a bubble in large U.S. company stocks, leaving smaller companies vulnerable. In December 2020, investor Michael Burry shorted Tesla stock and bet its market cap would collapse like the housing bubble. He wrote on Twitter, "My last big short got bigger and bigger and bigger and bigger." In May 2021, it was reported that he had held puts, options to sell, on over 800,000 shares of Tesla. By October, however, Burry had closed out his short position after Tesla's stock value rose 100%. He then declared that he was no longer betting against the company. The U.S. economy is expected to enter a recession and experience renewed levels of inflation in 2023, as predicted by Michael Burry, the investor from The Big Short, in a tweet posted on January 2nd. This comes after the financial regulator enforced a stricter monetary policy due to rising inflation in 2022, which has had an adverse effect on both stocks and cryptocurrencies. Burry has cautioned that the inflation rate is not yet climbing, with the Consumer Price Index, or CPI, predicted to drop significantly in 2021. The worst may come in the second half of 2023, when it could reach a negative value, thus signaling an economic recession, something that was already forecasted for 2020. U.S. inflation figure. The U.S. inflation rate hit a 40-year high in June at 9.1%. It stayed above 7% in November. The Federal Reserve set an objective of 2%, and when this was not met, they increased their base interest rate from near 0 to more than 4%. They suggested that by 2023, the peak will be at more than 5%. Rising interest rates can help to reduce inflation, but it may also cause a decrease in business profits and slow down the economy. This could lead to a decline in asset prices and result in a recession. In 2023, Burry predicts that inflation will decrease and the economy will experience a downturn. This could prompt the Federal Reserve to reduce interest rates and the government to expand spending to encourage economic growth. In turn, this would create more demand, bringing up inflation levels. Burry's bet against the housing market in the mid-2000s, depicted in The Big Short, was extremely profitable. In 2021, he invested in GameStop and bet against Elon Musk's Tesla and Cathie Wood's flagship ARK Innovation Fund. This investment yielded great returns as well. Last summer, the Scion chief warned that a historic bubble in meme stocks and cryptocurrencies was forming, potentially leading to what he called the mother of all crashes. He urged investors to be cautious. Michael Burry's foreboding prediction for 2023 in The Big Short. The cost of living is skyrocketing, and a recession is looming. That's the fear on everyone's minds. Economists predict a recession in 2023, raising concerns for consumers, markets, and governments alike. It's time to get prepared. This is no longer just a prediction, it's an eventuality. With inflation at a 40-year high, it's time to brace for the coming recession. Economists predicted in a December survey that there is a 70% chance of a recession in the coming year, up from 65% in November. They also forecasted that consumer spending would only marginally increase during mid-2020, which can affect GDP growth. The Federal Reserve's interest rate hikes were identified as one of the factors that could reduce demand. The Federal Reserve will likely maintain a tight monetary policy for the foreseeable future, as projections indicate that GDP growth in 2023 will be slow, with a 0.7% dip in the second quarter and no growth in the first and third quarters. Maria Vasiliou from Goldman Sachs Asset Management notes that if the effects on real GDP growth and unemployment become particularly severe and inflation has dropped close to the target, the Fed might reconsider its current policy stance. The U.S. in recession by any definition. Elon Musk and Jeff Bezos cautioned that a recession might be approaching. They advised people to hold off on bigger purchases, such as TVs, fridges, cars, etc., and save their money until the future becomes more certain. Keeping some cash in reserve can help reduce risk in an economic downturn. Small business owners would do well to follow the same advice. Taking risks off the table can help protect against difficult times. But Michael Burry, the renowned investor who has become a sage on Wall Street, agrees with this bleak outlook. He recently made his predictions for 2023, which are not promising. According to Burry, inflation is likely to drop, possibly turning negative in the second half of 2023. This could result in the U.S. economy entering a recession, whatever definition of recession is used. He made this declaration on Twitter on the 1st of January. Thus, it is clear that The Economist believes a recession will take place in 2023. It remains to be seen how drastically this will affect the economy and the lives of people living within it. However, one thing is certain. Burry's comments have already prompted much discussion on this looming economic issue. Only time will tell how accurate his predictions are. Michael Burry's predictions should serve as a wake-up call for investors to take precautionary measures. With the 2023 market crash looming on the horizon, it is essential to know what changes may occur and ensure portfolios are adjusted accordingly. It is possible to predict the future with certainty, but by doing careful research and staying informed, investors can be better prepared for what lies ahead. What do you think? What is the best strategy to stay ahead of a potential market crash in 2023? Share your opinions with us in the comment section below. Do consider liking and subscribing to our channel for more interesting videos like this, as it helps immensely in providing you with quality content. Thank you for watching. See you in the next video.